Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we're taking a look at an airline company. This is a sector that I've never looked at before. I've never purchased within before. I've only heard bad things. It's very unpredictable. It's very cyclical. I at least want to give this stock a shot. So just a little background on the industry. It looks like there's some nice recovery from the pandemic lows in demand for flights. It dipped down to 16.9 from a high of 38.9 and currently sits at 32.4. So it is a strong demand year for flights because we're only halfway through the year. We see that 2013 for the entire year came in at 32, so we're right around that level at the moment. It looks like we're going to be at an all-time high come this year, which will probably help airline stocks, especially on the earnings front. So the specific company we're taking a look at is the Delta Airline Company, ticker DAL. This stock reached a high of 63.44 in late 2019, as to be expected. The fundamentals look very good at that point. Flights were in high demand, and then took a huge drop, reaching a low of almost $18 in 2020 amid lockdowns and travel restrictions. And it's recovered. It came back up to about $50 back in 2021, and now it's rebounding again after the drop that it experienced, back up to about $43 at the moment. Now, what I'm looking at, I'm coming up with about $48 for the buy range. In fact, it may be even higher as I tweak the numbers a little bit because there's a lot of variance in this stuff. They have awful trends from 2020. The business basically reset, and in 2019, it looked like a pretty good company. So there is all of that to factor in. Fair value about 57, and then a sell overpriced of 63 or above. So right about the peak that it had experienced. But we can take a look at those numbers and see what is going on there. So they're expecting 20% growth in revenue this year compared to the 2.5% that they had been experiencing. We see they went 47, dropped down to 17.1, 29.9, and then 50.6. So this year they hope to be coming in around 60.7. And even if they come in at half the growth this next year, we'd be looking at 66.8. And they're expecting earnings of $5.69 this year, $6.89 next year, which, based on the current price, that's giving it a earnings yield of 13.3%, which is very impressive. That's one of the metrics that Benjamin Graham likes to look at, and would consider buying this company just because of that yield. The share count, they had issued more shares back in 2022. They were holding it stable throughout the pandemic. So hopefully they'll start to drop the share count and not continue to issue shares. If they continue to issue, it will be a definitive no for me. But the fact that there's a negative tangible book value on the company, it's already a no for me personally buying it. Although I think there's some upside here, I'm going to have to give it a hold. Shareholders' equity has been climbing since 2020. It was pretty big in 2019. Like I keep saying, 2019, they were a good company. And now they have to make up for all of the damage that was done during the pandemic. Assets, we see them growing their assets pretty well, 3.85% year over year. Liabilities, they have been recently decreasing them over the long term. they had been increasing them. A lot of debt was issued in 2020, most likely to just keep the business afloat. So they said that they had record cash flows in Q1 of this year and were able to pay down $1.2 billion in debt. So we're going to be looking at the shorter term trend of the negative 3.5%, projecting those forward. And they think that they're going to come in with $2 billion in free cash flow this year, which will be good compared to the negatives that they've seen. And hopefully we'll get them back towards the trend like we saw in 2019. What brought it to my radar was they announced that they were going to be paying a dividend again, 10 cents a share. So it's going to be a 0.7 yield for this year. Going forward, of course, it'll be 40 rather than the 30 because they've missed a quarter already. But that helps. I don't buy anything that doesn't have a dividend. So at least they think that they've got enough cash flow to be thanking their investors. And hopefully they start to grow that again because they had a strong dividend back in 2019. The share price currently sits almost $43, and based on the earnings estimates, it's a 7.5 PE. So I think that it's very undervalued on the earnings front if they're able to come in as expected after quarter one and the demand that we see. It wouldn't surprise me. We see a nearly $100 jump in the valuation of earnings if they're able to do that. Cash flows, since it went from negative to positive, we see some nice value coming from the cash flow. Balance sheet, we see a bit of growth if they're able to start buying back shares at the rate that this is a pretty small rate because this is looking from 2019 all the way to 2022, and they were holding flat and issuing shares, yet there is a bit of a downtrend in there. And then the dividend, I had put in 1 cent just so that it wouldn't mess up our equations and give us a lot of div zeros, but that actually brings value now. So looking at the 2023 numbers, that's a fair value of $95, almost $96, which would give us a buy at 81 and a sell at 105. Now, I don't think that that's actually what we're going to be looking at. We do have to factor in all of the debt and everything else into there. It's just that tangible book value definitely is what's holding me out of the stock. They are on a trend, 14.4, 12.1, 9.3. So hopefully they're able to have this positive in the coming years. But while it's negative, it's just not the sign of a quality company and not something that I would be investing in. So I'll have my eye on it. If it's something that you currently hold, I do think that there's upside to you. Probably 50%, I want to say at least. Looking at these forward numbers, they're showing some incredible growth compared to 2022, and their revenue was even higher than 2019. Their actual EBITDA and earnings were significantly lower though. And back in 2019, they were trading for almost $60 a share. So that's where you get about a 50% upside from there. That's what I'm seeing on the stock. Hopefully you guys are able to take something away from this. Just the fact that it's the airline industry and there's some red flags, I'm just going to say watch. I can't consciously say buy, although I'm fairly certain there's an upside to it. The ROE was decent at the end of this last year. If they can get it back to the 31, that'd be incredible. But I don't think it's going to be anything that I'm going to be touching for a few years now. Not until they get this taken care of, improve, is consistently profitable, and start raising that dividend. But I want to thank you guys for watching. Please like, comment, subscribe. Let me know what stocks you want to see, and I'll catch you next time.